You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it. You got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Boot Camp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, your Options Boot Camp drill instructors, Mark Longo and Dan Passarelli, will break it all down for you. Options Bootcamp is brought to you by Tasty Trade. Ready to shred your paper trades? Then trade at Tasty Trade, the broker that gives you what you need to make your own way. Get smarter every day with options education and research tools. Analyze your risks clearly with a potential profit and loss graph. Chart your way with hundreds of indicators. Make the numbers make sense and find the opportunities only you can see. Trade it with fewer clicks on an easy-to-use platform. Mobile, desktop, web. Supported by a trade desk with decades of combined experience. Stocks, options, futures, and more. You choose, you trade. Get what you need to make smart moves. Go to tastytrade.com/pod to see for yourself, genius. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. Fall in boot. It's time to get into peak options trading shape. It's time for Options Boot Camp.
All right, everybody. That music means we are back for our double header of all things OBC. If you're in the live, just enjoy coming at you. In fact, it's going to be a triple header for you in the live today because I'll be back after this going deep into all things futures on the Futures Rundown. So stay tuned for that fun. If you're not done with Dan's, I got Dan Collins joining me a little bit later today. So it's another Dan Squared day here on the network. Speaking of Dan Squared, we are joined once again by our old pal, the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring, what the cool kids call to Mr. P, welcome back to the show, sir.
Hey, Mark, it is great to be back doing yet another OBC.
Yet another OBC as well. Reminder, listeners, if you want to join the live, you want to get access to the giveaways, congratulations to, I believe it was Smoking Joe Frazier, who won the box for Joe Lewis. Actually, Joe, I get all the boxing names confused. Joe Lewis, Smoking Joe Lewis, who won the Pro Trading Crate this past month. So congrats to you. If you want to get your name in the hat, you want to join the live, you want to get access to Pro Q&As like the awesome one we just did yesterday with Dan's nemesis, Uncle Mike, as well as, of course, Options Oddities, and a whole bunch more banger last week talking about quantum computing straddles and everything else. Only one place to go, theoptionsinsider.com/pro. As we go on into a little bit of the mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody. Time to dance. Time for you folks to take the reins. First off, Dan, we have the results right now of our crystal ball poll for the end of the year. We asked you folks, as we do every year, listeners, it's our official 2025 VIX closing price contest, I should say. we mixed it up a little bit this year. We went for VIX flavor zones. So choose your flavor for the end of year VIX closing price. And we also obviously have bonuses. If you reply DM, you get to play along in our 2025 Crystal Ball contest. We had 2 winners last year, plus an honorable mention who was 0.01 outside of them. So we actually had 3 folks come clean me out for some pretty valuable prizes. So congratulations to you. My wallet hurts, but I'm happy that you folks are having a good time out there. And Dan, we asked him, where are we going to finish in VIX at the end of this year? Is it going to be spicy, aka ghost pepper, north of 20, or a little less spicy, but still tangy? We're going to go spicy habanero, the 16 to 20 range. Or we're going to dial back the heat a little bit. We're going to go mild buffalo, 12 to 16. Or is it going to be a bland, tasteless, flavorless oatmeal below 12? Dan, what do you think won with our audience, sir?
Probably not bland oatmeal, I think. And I would think that ghost pepper might not take the lead either. But, like when things are fresh and you have the recency bias, when things are fresh in people's minds. And when volatility is high, you ask this question. I don't know. I'm guessing spicy habanero.
Not a bad guess. That's what won last year, and that actually was the correct answer last year. This year, Dan, folks are feeling really spicy. They're feeling tongue burning. They're going ghost pepper, sir, north of 20. Exactly a third of our audience, 33.3%, going ghost pepper. It was a close second for number 2 with spicy habanero, and then 32.4%, 29.6% for mild buffalo. Only 4.6%, Dan, going bland, flavorless oatmeal. A lot of guesses in our crystal ball contest. We haven't even begun to sort through all those. Our producers will dive into all that fun. So because we like you folks, we have extended the contest, listeners. So the poll is now closed, but you can still reply or DM to that tweet with your VIX high, low, or close, or all 3. You get 3 swings of the bat this year. That's how generous we are. If you hit it on one of them, within a 1/10 of a point margin of victory, you too will win the grand prize and clean me out for some serious moolah. So enjoy that. Good luck to all of you out there. It is extended through Friday's Vol Views. So get your guesses in now, listeners. We also asked you, this came up on our Option Block show on Monday. We saw big prints going up for the Feb 15 puts and the January 17 puts expiring next week on the 22nd, both trading for 26 cents around the exact same time. So we thought, hey, gun to your head, you got to buy one. Which would you rather buy, the Jan puts, the Feb puts? Neither. Or would you rather buy that diagonal for no money? And 37.5% of you chose the Jan 17 puts. That's looking like it's working out right now as the markets are rallying hard. Vol is going to die post-inflation numbers here today. Got a little bit of earnings kicking in there as well. So markets looking robust today. Feb 15 puts and neither tying with both 18.8%. And they coming in at number 2. They want to buy that diagonal, Dan, for no money. They want to buy the Feb 15, Jan 17 diagonal and pay naught for it. So intriguing stuff there. We also asked you at the end of the year last year, listeners, we said it's our final question of the week for the year. Very straightforward. Which asset class do you feel has the most upside potential in the new year, 2025? We gave you, obviously, only limited to 4 choices. People wrote in with others, but our 4 choices we gave you are equities, fixed income, crypto, and vol. And Dan, what is your choice, and what do you think our audience ended up going with?
This let's see here. Probably equities, I would say, for me. And I don't know, everybody likes to think people think just like they do. So I'll say that's what the audience said too.
That's been the winning trade last couple of years. It's hard to fault it. But this year, Dan, vol took it. Nearly 50% of the audience, 49.3% saw more upside potential for vol than for stocks. That obviously doesn't bode well for equities. But number 2, Dan, crypto, 22.7%. So that's kind of interesting. Again, hard to fault him on that one. A banger year for crypto last year. Only 20%, a distant third, Dan, for equities. And then 8% bringing up the rear for fixed income. That kind of surprised me. I thought just the momentum of equities would carry them on a little bit higher. But our audience, Dan, they are a savvy bunch. Speaking of savvy bunches, Dan, Let's get to some more of their questions and comments. This one comes in. This is a response to our response to a listener question from a few weeks ago. It was our friend from Bulgaria. He wrote in asking, he had two questions. He asked about the premium in the puts on the same strike for the calls and why is that coming in from a vol perspective. We spent most of the time on that. In fact, we had to cut in a great segment from the Flowmaster explaining exactly why that happens because he runs a platform that does that. And so I thought it was a fascinating little nugget. Hopefully you stay tuned fully through the end of that show, listeners, and you heard that snippet. We didn't spend a lot of time on his second question. It was kind of a throwaway question, which was, is the rule of 16, is that really valid? And we both said kind of no, but you could kind of fudge it. In lieu of nothing else, it's a decent little approximation, but it's not entirely accurate. And that was our takeaway. You had a longer response, Dan, on that one, because I was focused more on what I thought was the larger, the more salient question, which was the put premium question. But Dan, we have a listener responding to our response. This is B.D. Liedl. And he gets a little snarky, Dan, but he also says he's a long-time listener. He loves the show, he says. So we'll forgive a little bit of snark, Dan. We're big boys, right? All right. So he writes in to say, a recent listener of OBC asked if the rule of 16 is correct. Do I divide implied vol by 16 to get the daily move? He says, I love you, Mark and Dan, but here we go. Dan was right to say no, and yet oh so wrong after that. This is one of those questions that strikes a nerve with me. I think, Dan, that's a takeaway from this. This clearly struck a nerve for this individual. They obviously have been kind of stewing on this for a while, and when they heard it come up on the show, it just unleashed the floodgates of a very epic response, graphs, quotes. I don't think we have time for all of it, but we'll get to the salient details there, Dan. But he says, this is one of those questions that strikes a nerve for me for some reason. Yeah, I can't explain why it does there. What is it? BD Liedl. But hey, to each their own. We all have our triggers, I suppose. It is so simple, and yet generations of options traders can't seem to comprehend it. My usual reaction is to let the masses wallow in their ignorance and smile to myself and call it at least some edge that I have. But alas, today I have come to help. Short answer, he says, 16 is incorrect. You should divide by 20. This answer is about 95% satisfactory. It covers pretty much all the bases any regular person needs. All right. But then he doesn't stop there, Dan. He goes on quite a bit. Note that the, quote, daily move can be directly interpreted as, quote, the straddle, or more easily understood as the 1 day at the money straddle. Yeah, I think we can agree on that. We don't need to hit on that too much. BD Liedl. He says, over decades, all you had to do is look at one straddle the day before expiry and see this is true. You could do it every day now. He says, please be aware that no one really understands time anymore. Fridays, they will use 3 over 365 for Monday's options and 1 over 365 during the week. So even during the week, they'll mess it up. Dan, this is kind of outside of scope of what we're talking about here, but I read it because it's intriguing to me just for maybe a topic for a future episode, maybe a discussion of theta in the modern market of 0 day and everything else.
I read what he said about that. I wasn't sure what he meant. I mean, the market takes the weekend out on Friday. Like, it doesn't go from Friday's days to Monday's days over the weekend. Like, I'm not sure what he's talking about. But yeah, I'm so glad he's here to help.
I can see your sarcasm, sir. He
has the arrogance of a doctor, but I hope he's not. There's no bedside manner. He could phrase this in a much nicer way.
We're rolling with the punches here, Dan. We're being the big boys here.
Yeah. No, I mean, hey, I've said on the show a million times, like I don't know everything there is. I do the show because I like talking about something I'm passionate about and like helping other people, and but yeah. So let's continue with this, guys.
He says weekends are damn near irrelevant. That's debatable. I think it might be a fun debate episode for a future show to come up here. I think there's something to be said about the nuances of theta in the modern era of 0 DTE. I think a little bit different. Obviously, as you point out, people still do take a weekend out. It's just done a little bit differently now. So it might be worth exploring that on a future show. But again, that's a completely distraction. We got to get to the meat of it. He brings up our old buddy Nassim Taleb, which he also points out. This is something he and I agree with. He puts in parentheses Nassim Taleb in his pontificating ways. That is about as apt of a description. I recently thought, someone mentioned Talib something to me, so I said, I haven't read his Talib stuff in a long time. Let me go flip through some of his stuff. I forgot which one I picked up. It might have been Black Swan. I was flipping through random pages, and I came across a quote somewhere, Dan, where he says, I was sitting in my study, I believe it might have been my attic, and I was pontificating on something, and I was working on the math, and he puts in parentheses in the same sentence, on a graduate level, or something along those lines, parentheses, and keeps going. I just closed the book. I said, oh my God, really? Are we that insecure? You need a parenthetical to state the level of the math you were working on. So he and I can at least agree on that. He says, Nassim Taleb published a paper to show that essentially no one in finance understands this concept. He is correct. Also, Ewan Sinclair is correct. One of the few people in the space that seems to understand options theory. He says, to be honest, he's sad, Dan, that he thinks we have forgotten chapter 1 of Ewan's book. As he points out, Ewan has been on the network a bunch of times. Yeah, he has. He has been on. He has been a little bit. We had to put Ewan in a little bit of timeout. He got a little spicy, a little political, shall we say, post 2020 election. You got to give him a little bit of a cool off period. I think he's okay now. I think we could bring him back. But he came on and he decided to just let everyone know his thoughts on the outcome of the 2020 election in no uncertain terms, Dan. It was interesting, just to put it mildly. But he quotes Ewan's first chapter here. He says, traders often think that 16% annualized volatility corresponds to a daily return of 1%. But this is due to confusing the square root of average squared returns with the daily return. To translate between daily return size and annualized volatility, we need to divide volatility by 20. So that's a snippet of chapter 1 of Ewan's volatility trading. So again, getting back to this notion that 20 is the accurate number as opposed to 16. He also says there's a simple formula that I memorize. He says the straddle percent equals volatility divided by 20. Again, there's that number 20, listeners, times the square root of the trading days to expiration. He goes on with other formulas and things. He says all you really need to know, if you divide by 16, you get the break-even point for a variance swap. You need a strip of options that reproduces the VIX calculation. And again, that gets to what I was saying on the show a couple of weeks ago when we addressed it. I think a lot of this took off in the early days of VIX. That's when I first remember hearing it getting a lot of traction. I think some of that is done by the SIBO. The SIBO put that out there to say, hey, this is a use case for VIX. You can interpret it, this number, as this meaning by multiplying by 16. So that was where I first remember really hearing it getting a lot of mainstream credence. So maybe you can point the finger back at some early marketing for the SIBO. And again, that makes sense because it lines up with the VIX calculation. If you divide by 20, you get the break-even point for a straddle. And he has a bunch of other stuff, but he ends it, Dan, with cheers, guys. I do enjoy the shows. You wouldn't know it from a lot of his question, Dan, but he says he does enjoy the show. He must hate listen a lot of the time. He says, I can't wait for the one about buying synthetics to get the stock payoff but avoid the borrow fee. He says, as I see all over Twitter these days, as a way to short UVXY. And that will surely find a nerve. Oh, we don't want to find another nerve. We already struck a nerve with the rule of 16. But Dan, he does point out, I mean, at the end of the day, we said it was kind of a fudge and a kludge, and 16 wasn't accurate. Dan, what are your thoughts on our friend here, who clearly got a bee in his bonnet over the rule of 16, sir?
Yeah, talk to a therapist, first of all, if it upset you that much. But, no, I mean, I like having conversations with these. I just, like having a respectful conversation with these. This guy, he's sad that we didn't read this guy's book or whatever. I mean, come on, man. But anyway, this is, I mean, honestly, like I tell people, I know how to drive a race car, not build one. And that's what I do with options. That's my role. Like everybody knows certain things about certain things, and I am not a math professor. I do recall looking at this a while back, and I know that one of these formulas is more relevant if there's like fat tails. It takes into account outliers a lot more. But I did actually look at the paper that that this guy mentioned that Taleb wrote. Although I will agree with them on Taleb's pontificating ways, but literally the first sentence in the introduction by Taleb says there's no particular normative reason to express or measure volatility in one of several possible ways, provided one remains consistent. So I think Tlaib is just pointing out that there is a difference between these two things. And, with a lot of things like the option pricing model and like skew, like we were talking about on the last show, especially the options pricing model, it's really all just used as an anchor, and especially the option pricing model. What's the phrase that they say about it? It's the oh shoot, how does that go? It's like the worst formula, it doesn't calculate option prices correctly. It has to be adjusted, which is basically what skew is, vertical skew is. But we all use it sort of as an anchor and do our adjustments. And if we're paying attention to things like skew or standard deviation versus, mean absolute return, if we're consistent with one of them and follow the same things over and over, you could probably get away with either. I do think it's important splitting hairs and getting things as accurate as possible. So, I'm definitely not dismissing this conversation. It's a good point. And I kind of want to go down a little bit of a rabbit hole and bone up on this a little bit more as well, because, it's just one of those things that I've been using divide by 16 for a long time. So I don't know. I'll probably end up digging in a little bit to this, just a little bit more.
This opens up how much of the options market is, you're right, open to interpretation. Do you use 252? Do you use 365? Do you use the 16 versus 20? There's a lot of different ways people like to carve up that onion at the end of the day, and it leads to a lot of interesting discussion like we had here on the show. We appreciate all of our listeners, Dan, even the ones who get a little bit. He says he loves the shows. After he slams us for like 20 minutes and 15 pages. Yeah. He says, but I love it. Yeah. That's my favorite. That's my favorite part about that. All right, since we're talking about books, Dan, let's get out of here on a happier note with this one from Cindy. She just has a pretty straightforward question for you. She says, is there a new edition of Dan's book on the docket anytime soon? I'm assuming she's talking about the seminal tome, sir, Trading Options Greek.
Yes. I do not have plans for an edition of that one, but I am looking at a new one. So that's something I'm pretty excited about. Nothing confirmed just yet, but pending news maybe.
Is it called The Struggles of Working with a Super Sexy Options Host? Is that the confessions of a subpar, less sexy options guy? Is that what it is? It's okay if you want to do that. A confessional, if you will, sir.
That part got edited out.
Oh, that's just for the premium edition. I see, for the subscribers. Well, that music, Mr. Dan, means we are done here, but no rest for the wicked, no rest for me, listeners. I am off to the races for a little bit of futures rundown. I'll be joined by another Dan, Mr. Dan Collins, in a few minutes. So if you're listening live, stay tuned for that. Otherwise, you listen after the fact, just hit next. And before we go, Mr. Dan, if folks want to check out what you got cooking, including the existing editions of your books, where should they go? What should they do?
Yeah. Actually, I'll tell you what. I'm talking about a lot of things that will be in the book on my new Substack. And that is wealthbuildingwithoptions.substack.com. Wealthbuildingwithoptions.
You and everybody loving up the Substack these days, Dan. I got to get in on the whole Substack craze. 2017 is back, listeners, and it's bringing in just a ton of options content. Check them out over there on the Substack. Check out our friends over there at Tasty while you're at it. tastytrade.com/podcast, the place to go to kick the tires and light the fires. Tell them we sent you. They'll be very happy to hear from you. If you want to hear from more of me, head out to the pro, theoptionsinsider.com/pro. You'll be able to join us for our next show instantaneously, talking about a mad year that was in futures. And we're back again with our rest of our array of content, double option block and TWIFO tomorrow, vol views and oddities on Friday, option block and the crypto rundown on Monday. And then we're back again next Wednesday, another episode of Options Bootcamp. Stay safe out there, everybody.
Options Bootcamp is brought to you by Tasty Trade. Ready to shred your paper trades? Then trade at Tasty Trade, the broker that gives you what you need to make your own way. Get smarter every day with options education and research tools. Analyze your risks clearly with a potential profit and loss graph. Chart your way with hundreds of indicators. Make the numbers make sense and find the opportunities only you can see. Trade it with fewer clicks on an easy-to-use platform. Mobile, desktop, web. Supported by a trade desk with decades of combined experience. Stocks, options, futures, and more. You choose, you trade. Get what you need to make smart moves. Go to tastytrade.com/pod to see for yourself, genius. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.